So after something like 3 weeks of telling you that I thought the 2021 Britannia is one of the best deals available right now, well, this showed up. And she's super shiny, and I'd tell you more, but that's just not what this video is about. Okay, so let's start this off by saying that the price of gold is going to continue to climb in the long term. I think that just goes without saying almost, but I don't think that we're going to see a significant gain happening over the next 8 months. We are seeing the price of gold inching back up right now, but most serious analysts are calling for relatively sideways movement through the year. And that doesn't discount the possibility of fluctuations. It just says that at the end of the year, the price will be about where it is today. Now, two feasible alternatives to that would be driven by a market crash or wild inflation. And we've talked about what a market crash would do. Basically, that crash would pull down the price of gold temporarily before sending it back up. And then inflation would hypothetically just send it up. Now, outside of those two scenarios, though, gold doesn't really have a big reason to shoot up this year. People like to cite Michael Burry, and if you've seen The Big Short or know the story behind the 2007 and 2008 mortgage crisis and market crash, then you'll know that he's the investor who called it first. Now, the important thing to know, though, is that Michael Burry exposed the issue years before anything actually happened. He sounded that alarm in 2005. And the reason I bring any of that up really is that Michael Burry keeps coming up in the comments. So I don't know who's talking about him, but clearly somebody is. And also, just because something doesn't look sustainable, like the current money printing to fund the stimulus rounds and entitlements, or something appears to be in a bubble like the market does right now, well, that doesn't mean that we're on the verge of a collapse. So when we hear non-professionals shoutboxing that gold and silver are getting crushed compared to expectations, or that they are about to shoot the moon because everything is in a bubble that's about to pop, well, we want to be a little bit careful. Now, first of all, I don't think that we have any Michael Burrys here on YouTube, but that hyperactive advice to buy now or buy the dip or this is what you need to be buying right now because the mega crash is coming, again, that's not being given by professionals, and it's not taking into account what's actually happening outside of the last 12 months. The forecasts coming from actual professional analysts look a lot more like sideways trading for the entire year. Now, gold was already making gains coming into 2020. It was at a multi-year high ahead of everything that happened last year. So everything that happened, all the responses to it, that just sent the price higher. So any improvement there is going to be downward pressure on the price of gold. And if you're thinking right now, what about all this new money printing? Well, the financial system and overall economy isn't immediately accountable for much of anything, really. Just because extreme measures are taken in a year doesn't mean that we pay for them the following year. Things just don't work like that. So at best here, maybe we're a little bit like Michael Burry, and probably more like a dime store Michael Burry. But we'd be calling something out that seems obvious, but it might be years down the road, might be years from actually playing out. I personally think that we're still playing a long game by buying the metals, and any moonshot advice that pushes you to waste money on high premiums or overspend by backing up the truck, well, that's not coming from a professional or really anyone who cares at all about your financial security. And if you've been an athlete or fighter or really anyone who has a coach, you've been told to stay focused because nobody makes good decisions when they're worked up. Now, if you're not a fighter or an athlete, you probably have similar advice, except you have a little bit more time to do it. You've probably been told, hey, sleep on it before you do anything rash. That's good advice too, and I think that either side of that works really well right here with precious metals and when you should buy. So here's the deal. You don't have to party like it's 1999 right now. Again, this is just my opinion, but it's also the opinion of most unbiased financial analysts. And I think it makes a huge amount of sense to be buying gold just in general, and I think it also makes a huge amount of sense to be careful of high premiums, because I don't think that we're going to be seeing a moonshot price increase that will make us all wish that we'd backed up the truck. This whole topic reminds me of the first few videos that I uploaded to YouTube, which are terrible, by the way, don't go watch them, but I was just talking about the fundamentals of buying gold and silver, trying to explain how and why I carved out an allowance each month for a gold purchase that didn't mess with the rest of my financial commitments. Gold is not cheap, so my purchases of quarter ounce American Gold Eagles were just about right. I was spending less than $500 a month, and then I was accumulating a minimum of 3 ounces of gold per year. At the time, I was actually buying more than that, but any additional purchase came when it was both convenient for me and also when the price allowed it. But last year I started buying more, and there were two main reasons for it. First of all, we were in the middle of a perfect case for gold, and I just wanted to have more. And second, I was putting more work into this channel. So by the end of last year, I actually had channel revenue that could also fund more gold. And you'll see that with a lot of channels here, particularly the ones on soapboxes yelling for you to back up the truck, because those videos drive more ad revenue, and that makes it easier for them to show you their recent haul from the local coin shop because they have channel revenue to buy it. What I'm planning to do on this channel is show you what I'm buying and then talk about why I think it makes sense to continue buying and not try to work any of you up into a buying frenzy. I'm not going to tell anyone what to watch, but I would probably also tell you to be a little bit skeptical of those other channels that are throwing around those clickbait videos, because I think that information is toxic, even though it can be a fun fantasy to watch once in a while. That fantasy can go wrong once in a while though. Now, last year I made a few videos saying that I didn't see silver exceeding $30, and I was saying in 2020. Now, I didn't have a big following at the time, and it was hard to get much traction when other channels were out there discussing the possibility of silver to the moon. And what would happen was that I would spend a huge amount of time replying to people yelling at me in the comments, telling me how wrong I was, because a handful of very popular YouTube channels in the community were shouting the opposite. They had a higher podium. So even though anything that I say is just based on opinion and hopefully some clear observation, it did turn out to be correct. I mean, silver did not run past $30 in 2020. Now, I wasn't telling anybody not to buy silver then, and I'm still not telling anybody not to buy silver now, but it was a really good example of some of that bad information. Again, I don't have a crystal ball or really any expertise as an analyst. I just paid attention to what was actually happening rather than paying attention to some of those hyperactive YouTubers and what they were squawking. Now, some of that squawking might seem reasonable. There's a huge amount of money being printed, and the market does look like it's in a bubble. But we're still early into both the issue and the response, and the dime store Michael Burries are just saying what seems possible without actually paying attention to what's actually happening. And it's just easier to do. It's also better for ad revenue. Regardless of all the bad advice, though, the good that came out of this is that a lot of people got the kick to get into metals. And I'd say that part is great, and you should keep it up. Just be careful about the hype from people telling you that the sky is falling on a 3-time per week posting schedule. When things get crazy, and I'd say the retail market for gold and silver right now is definitely crazy, you want to stay focused or sleep on it. That advice is very good. You drop back into the fundamentals. You don't overpay, you don't overextend yourself, and you don't be so optimistic about returns that you make bad decisions when you buy. Kind of like the ABCs, but I can't come up with an acronym that works for that. Anyway, if you were to use the forecasts from actual analysts, you'd expect metals to move sideways through 2021. That would be your baseline. Now, prices are going to fluctuate, but the nice thing about analyst predictions for the year is that they don't tell you that prices are getting crushed one week and that you need to act now the next week. They look at what's important, and that's the longer game, so it'd be flat over that longer period. So even if we saw a $50 spike in gold price in a day, if you pay attention to the pros, you could expect that there's going to be a comparable dip in the near future that would let you buy again. That means you get to buy when it's convenient rather than adding pressure to jump the gun like that friend we all had in high school egging us on to do the dumb things. And if you didn't have that friend, by the way, then you probably were that friend. Anyway, if you buy when it's convenient, then you don't make things uncomfortable in your home life, and you'll also stick with it. Now, I don't get anything out of this one way or the other. I'm just trying to put out some information in the hopes that it helps someone now and then. I'm not policing. This is actually a particular soapbox that I'd like to get off of. Now, I'm interested in other opinions on the topic as long as they're informed. And I'm actually working on setting up a conversation with a guest on a few different topics, and that's going to be coming soon. I'm very excited for it because Even though we might have some different ideas, I'm not sure yet, but neither of us has anything to sell you. In the meantime, I think those fundamentals that I mentioned earlier, the ABCs, they revolve around dollar cost average purchases. So I think that would be ABDCAs, always be dollar cost averaging. Yep, ABDCAs. Now, I won't remember that, but I think that makes good sense right now. And all these particular coins that I've been showing are the ones that I think make the most sense for that dollar cost average model. Now, I don't want to get too heavy into Buffaloes or Eagles at the moment unless I can find deals on premium. And I also don't want to get too far off track just to save a few dollars if it means that I'm going to regret those purchases a few months from now. And I guess that's me just repurposing that coaching advice to stay focused. So anyway, that's our baseline. Maybe I'll shake it up in the next one, but we'll call it good here. So let us know what you're up to in the comments and hit that like button if you're interested in seeing more on the topic of gold and silver. And I guess make sure that you have your notifications turned on too. I'm not sure if I've ever mentioned that before. Housekeeping aside though, I hope you're doing well. Thanks again for watching. I always appreciate your time. Take care.